has to be done by three things. There is, and it has to be spread out among these three things.
There's a financial problem. There's an imbalance problem. There are basically five big forces through history that drive everything. And in one way or another, that they will get that budget deficit down to that number. If they don't, we're going to have a supply-demand problem for debt at the same time as we have these other problems. And the results of that will be worse than a normal recession.
He warned ahead of the 2008 financial crisis. We are talking about Mr. Ray Dalio, a man who spent his entire career studying the rise and fall of countries and empires. He lived through the 1971 collapse of the gold standard. Decades later, he predicted the 2008 financial crisis. And today he warns that the US faces something even worse than the 2008 financial crisis. I explained his warnings in my last video, but here's the other side of the story. Because Mr. Ray Dalio doesn't just share alarms, he also shares a package of advice for America to correct its course of action. In this video, we'll unpack that advice with clear explanations, references, and evidence. And you'll be shocked to know that there are many things that the US could do, but chooses not to. Before we start our video, there's a small request. 99% of viewers have not subscribed to my channel. So if you also like to debunk and clarify the facts around major geopolitical and macroeconomic events, please like and subscribe to my channel. That will help me. Thank you. To address America's biggest issue of debt, Mr. Ray Dalio wants America to tame the deficit. At first, you might think, of course, reduce the deficit and reduce the debt. Straightforward, right? But here's where it gets interesting. How exactly the US can cut its deficit opens up some surprising and even uncomfortable choices. Choices that show that the government could take some steps, but often chooses not to. And choices that show that if only economic wisdom had been followed and not so much of political will, then America would not have been moving forward towards an economic collapse. So let's break this down and see what exactly Mr. Ray Dalio means here. We should start from the very basics so that we could understand the advice in more depth. See, every year the US government spends money on federal salaries, military, healthcare, and so on. This is known as the government expenditure in that year. At the same time, it collects money mostly through the taxes. That is called the government's revenue. So now if the government spends more than it earns in a year, what happens? It runs a deficit. So basically the difference between what the government spends and what it earns in revenue is known as the deficit. And the truth is that America is running deficits every single year for a long period of time. So right now that deficit is massive, around $1.78 trillion so far in 2025, which is roughly 6 to 7% of the entire US economy or the GDP. And here's exactly why Mr. Ray Dalio is worried about America's massive and irregular deficits that is piling up every single year. This is because a deficit doesn't just sit in the balance sheet. It triggers a dangerous chain reaction which people in economics term as the debt spiral. This spiral works as more deficit, which means more borrowing, which means more US bonds issued, which means supply of US bonds increases, which means investors demand higher yields or interest to buy these US bonds, which means bigger interest payments by the US government, which means even more debt for the US government. That's the debt spiral, a loop that tightens every time the deficit grows. So Mr. Ray Dalio's suggestion is simple, is to just weaken the loop, and he suggests that the deficit should be brought down to 3% from the current 6% of the GDP. It should be brought down to half of about 3% of the GDP. Why? Because when the deficit shrinks, the opposite happens, which is actually the less deficit means less borrowing, which means fewer bonds flooding the market, which means more demand, which means lower yields offered by the US government, smaller interest payments, and the debt growth slows down. So one path feeds the spiral and the other path gives America a breathing room. So now that we agree that the US should cut its deficit to half, the real question is how. So this is where Mr. Ray Dalio proposes his three-part, three solution. Three parts, three levers, and when you look closer, each one uncovers uncomfortable truths about how the American government really works. So the first part of the three-part, three solution is to increase the tax revenue. So that means the government needs to raise taxes to increase the tax revenue, right? Wrong. So do you know that apart from raising the taxes itself, there can be other ways to increase the tax revenue? And this is what Mr. Ray Dalio suggests. Not just to increase the tax interest rates, but also to get the tax revenue increased by other means. Let's talk about these means. So the first method of increasing the tax revenue without increasing the tax rates is to close the loopholes in the tax system. So what does that mean? Okay, so you might have heard that some large corporations and wealthy individuals use legal tricks to pay little or no taxes at all. And trust me, this is reality. Many large corporations pay little or no federal tax despite enormous profits, thanks to the loopholes and deductions built into the tax code. For example, 55 major corporations reported zero federal income tax in 2020. So if those loopholes could be closed, then the government would be able to collect more tax revenue without increasing the tax rates much. And we have certain projections in the past that testify the worthiness of this strategy. For example, see this. The US Treasury planned to close a partnership loophole that could bring in $50 billion over the next 10 years, all without raising the interest rates. And the IRS estimated a $696 billion tax gap in 2022, taxes which were owed but not collected in the year. So these are real and concrete examples of how raising the tax revenue without raising the tax interest rates is not just a theory. These are being proposed but not adhered to. So see, these figures in billions might look smaller to you compared to the trillions of dollars of US debt, right? But the point is that in a crisis situation like this, the burden should be shared by everyone. So it should not be shared only by the average American citizens. But despite closing these tax loopholes, the government is busy fighting its own internal and external wars in the USA. Another often overlooked way to raise the tax revenue is to focus on economic growth. So if the economy grows, then the same percentage tax gives the government more tax money. So let's take a very broader example. Let's say a country has an income or a GDP of $100. I mean, we are taking it very broadly. So let's say a country has a GDP of $100 and the tax interest rate is around 10%. So that means the tax collected in a year would be 10% of $100, that is $10, right? But if the economy of the country grows and the GDP becomes $200, then the same tax rate would collect a tax revenue of 10% of $200 now, which is $20, which is just double the tax revenue collected earlier of $10. So this is the point Mr. Ray Dalio is trying to make, that economy, if it grows, then it will help to have more in the tax revenue. But here's the problem. Instead of focusing on the economic growth, the American government is busy fighting tariff wars and political fights. So tariffs may bring in some quick cash, but they also bring in uncertainties. So businesses do not know what tomorrow rules will be, so they delay investments and cancel expansions. And this is not just a theory. Research indicates that a 10% rise in the US tariffs could knock about 1% of GDP through 2026. And studies even show that in highly tariff-exposed sectors like manufacturing, employment fell close to 2.7% because firms held back on hiring and the investments. So when tariffs disrupt trade, it's like throwing sand into the gears of this already fragile economic machine. So instead of fueling growth, it slows businesses, raises the prices of everyday goods and services, and hurts the very tax revenue that America needs. So that's why Mr. Ray Dalio says that US should first focus on surviving, fixing its debt and deficit, and restoring its growth. Wars, trade wars, tariff wars, currency wars can wait. Another way to raise the tax revenue without much increase in the tax rates is to have better collection or better tax collection mechanisms. Yes, Mr. Ray Dalio is talking about the government should have better and stronger systems to avoid or to prevent any tax defaults. Mostly the taxes are legally owed but are never paid to the system, and you would be surprised to know the numbers we are talking about here. The IRS calls this the tax gap, which is basically the difference between what people should pay in taxes and what they actually pay. As per as an estimate from the Budget Lab, this tax gap is around $700 billion per year. But here's the twist. This tax gap is not spread evenly between the rich and the average Americans. Basically, the rich and the average Americans do not skip the taxes in the same way. The same research from the Budget Lab states that the top 1% of the richest Americans account for nearly 30% of the unpaid taxes. So if the tax system simply collects more of what's already owed in taxes through better audits, digital records, and better enforcements, focused enforcements, then the tax revenue rises without raising the tax interests much. So all these methods, from closing the loopholes to having better and stronger mechanisms to collect the taxes and focusing on growing the economy, are crucial if America wants to raise its tax revenue and hence prevent itself from drowning in the debt. So Mr. Ray Dalio points out that having a modest 2% raise in the tax revenues could help America. Now, after the tax revenues, let's move to the second part of Mr. Ray Dalio's 3 solution. This is about cutting government spending. But here's the problem. So if you cut too much on spending, you take away jobs and benefits. When government reduces military contracts, defense workers lose jobs. If subsidies are cut, farmers or low-income families suffer. So spending cuts can easily add to the misery of the common people if not done in a balanced manner. Mr. Ray Dalio doesn't say slash everything. He suggests a balanced approach, a few percentage points here, a few percentage points there, enough to bring the deficit down without crippling the economy. But again, if the Congress is busy fighting its own wars and avoids taking these tough decisions, then the spending keeps climbing, the deficits widen, and the debt keeps piling even faster. Now let's talk about the third part of Mr. Ray Dalio's 3 solution, which is reducing the interest burden. Do you know that today half of US deficit is just interest payments on the old debt? I mean, think about that. It's like paying a credit card interest using another credit card. But before we fully understand what Mr. Ray Dalio's third part of the 3 solution is, we should understand few basic economic concepts. And those who already know can directly skip to the solution part. See, we should know the difference between the yield on US bonds and the interest that the American government pays on its debt. Let's break it down. When the US government needs money, it issues something known as treasury securities. These treasuries come in different time lengths in terms of their maturity. Treasury bills or T-bills, which are short term, the government borrows for a few weeks or months, usually less than a year. Treasury notes or T-notes, which last 2 to 10 years, and treasury bonds, T-bonds, which are long term. These are 20 to 30 years. Now, the rate which the US government promises to pay the investors who buy these treasury securities is known as the treasury yield, or simply the yield. So for instance, if you buy $10,000 worth of US treasury bonds at 2% yield, then the US government will pay you 2% of $10,000, that is $200 every year. And at the end of the maturity, for example, at the end of 10 years or 20 years, whatever the maturity was, the US government will pay you the face value of the loan, that is $10,000. But here's the tricky part. When you look at it from the perspective of the US government, the higher the yield, the more expensive it is for the US government to borrow. For example, if the government borrows $1 trillion at 2% yield, it pays $20 billion in interest each year. But if the yield jumps to 5%, suddenly the interest bill is $50 billion a year. Same $1 trillion is borrowed, but the cost more than doubles. That's why when you hear the yield on the US bonds increasing, that means it is becoming more expensive for the US government to borrow money. Now, why do these yields rise? Like, you might have been hearing a lot about these yields rising for the US bonds. So one of the biggest reasons for the rise in these yields is when the investors are nervous and have less trust on the US bonds, because then the demand for these US treasury bonds decreases, and hence the US government has to offer more yield on their US bonds to attract new investors. And this is what is happening with the USA these days. The debt as well as the yield on the US bonds is increasing day by day for the USA. And that's why Mr. Ray Dalio calls it so dangerous. As per the reports, in 2025 alone, nearly $9 trillion of US bonds will mature. If all that gets refinanced at today's yields or interest rates on the US bonds, then the interest payment that the US will owe will explode. And remember, as we said, that interest itself is eating nearly half of America's budget deficit. It's like paying the interest on one credit card by opening a new, more expensive credit card. So here, Mr. Ray Dalio has his solution. He says that if trust is restored and the growth comes back, and if America manages to bring the yields to 1 to 1.5% from the current average of 4%, then that would instantly ease the pressure. But for this, for restoring the growth and the trust on the American economy, America needs a full course correction. It needs to engage into more trade talks, have more firm policies, and eradicate all those internal political rifts that are following these days in order to attract businesses and investors in America to have that economic growth and trust restored. So here's the big story. Only if all the three parts, more revenue, less spending, and lower interest costs are handled together, can the US bend the curve back to safety. Otherwise, Mr. Ray Dalio warns that the country will hit the rocks.